Welcome to Momentum Monday. Today is December 17, 2023. Howard, are you enjoying the bull market?
I am, and what a week in San Diego, huh? Beautiful.
Yeah, amazing week. Yeah,
Last year was cold and rainy. This year, sunny and warm. So
yeah, cyclical. Weather is cyclical, just like the market.
the all right, let it rip. What do we got?
I mean, last week the Fed basically confirmed what the market has been anticipating and discounting since November 1st, that this is not going to raise rates anymore, and it's very likely that next year they're going to cut anywhere between 75 and 125 basis points. At least this is what the market is expecting. The Fed started this rally basically November 1st with their last Fed meeting, and then they accelerated it this past Wednesday. And just everything is back near all-time highs. I mean, at least the indices, the QQQ and the SPY are very close to hitting all-time highs. Small caps are finally rallying and trying to catch up, and they hit that. The 200 has been a big level of technical resistance. It's been tested 3 times, so maybe this time it's going to be able to go above it. And this is where right now all the action is, because all of the companies that are unprofitable and highly indebted in the past 2 years, they've been basically priced for almost bankruptcy.
Right.
Now these are exactly the stocks that are rallying the most. This is why we're seeing sectors like regional banks, rallying from, I mean, since end of October, they're up. They've almost doubled, like 36 to 54. Also, solar, one of the worst hit sectors in the past year or so. Also, pretty big rally from 40 to 51, and this one might have more to go. Also, we're very highly indebted, very highly capital intensive industry. So all of those sectors, all those stocks that are, Carvana, it used to be like the $3 stock late last year. It's the best performing stock this year. It's up more than 1,000%, like 3 to 51. Also very highly shorted. So anything that is very highly shorted, anything with short interest above 25%, has been outperforming. Obviously, Carvana is one example. We also have stocks like UPST and stocks like AAOI, also up 1,000% this year.
Wow. What do the monthlies look like? I mean, I still think these aren't high quality names, but they may, yeah.
I mean, they might not be, but for a swing trader, they're amazing.
Oh my goodness. Yeah, no. I mean, look at the shorts were it's amazing the short sellers kept at it when they already had 90% gains. It's just fascinating to me. You know, they just overstayed their welcome. I think the switch will go to quality, but all right, keep going and all.
Yeah, I mean, also a few other names that are just highly shorted. They're just starting to break out. Obviously, semiconductors are one of the big leaders. They were among the first sectors to make new all-time highs alongside software, which actually was the first one to make all-time highs. Maybe not all-time highs, but new 52-week highs. So, I mean, almost anything is really working. And obviously,
Yeah.
all of the high dividend paying stocks are also recovering. They were hit earlier in the year because the market was expecting higher interest rates. And then all of the high dividend paying players were hit really hard. Now they're trying to recover. What else are you seeing?
I'm going to share. I'm going to walk you through what I'm saying.
All right, I'm going to stop sharing. You go ahead.
Yeah. So let me share the screen because I did some work for everybody. I'm doing my work today. So what do I do? Share screen. Can you see my screen?
Yeah, I see your email. So make sure you don't have anything
Yeah.
Sensitive. All right, US household growth.
All right, so doing, oh, you can see my screen, right?
Yeah, small caps to large caps, yeah.
Yeah, so you can see that everybody was leaning the small caps were done. This is JC, we do this also on Trends with Friends. You can see like from false moves come fast moves. So you see how fast we've kind of versus the S&P small caps have rallied. So, you know, I do from the smart people that I talk to fundamentally and technically, I think we're going to see a move if the rally, assuming the rally continues into small caps. There is so much fuel. Apple right now is bigger than all of the UK, the whole UK market. So I think you know Apple's the world, so I think it's kind of priced in. Doesn't I'm still long Apple, is one of my top 5 positions, but it's the world seeing that it's bigger than the UK market. So if we don't even need a correction, if people just feel optimistic and repurpose capital in public markets, small caps could have an incredible couple of year run. So that's one chart I thought that was interesting. This other chart is the opposite. This is
Can you increase it a little bit? It's very small.
small. I'm so bad at this, ain't nobody. Let me see if I have no. But this is just earnings confidence and estimates for the large cap. So you see the green line, it's at like all-time highs. So you can see that like analysts are piling in saying the FANG, the big caps are the place to be and where earnings growth is in. At the same time, small caps are kind of reversing and coming up. So I think everybody who wants to be long these globally is, but again, you know, indexing works and people keep piling in money to indexing. So it doesn't mean if the market's going up, they will still do well just based on market cap, but it seems like everybody's in the pool. You know, my friends at Roundhill announced a 2 times leveraged FANG or Magnificent Seven in ETF. So everybody's jumping in kind of, it just seems obvious at this point, including all the analysts. So when they generally all agree, that's not a good sign. So that was one that's interesting to me. Let me go to this one. I don't think anybody would have predicted this, but S&P now 8% higher than where we were in 22 when the Fed started hiking rates. I think you can literally throw the textbooks out at this point. So I think if we were all told one thing, is that when the Fed starts hiking rates, you know, get out of the markets or be careful. And I don't think, listen, there's always analysts.
Looking right, so the market was falling before the Fed started cutting rates.
Yeah. So again, it just fooled a lot of people. So I think price action. It's just a reminder what we do here. Price action. So that's an incredible stat. I think the other thing.
If a year from now, Howard, we said that the S&P is down 8% since the Fed started cutting rates.
Yeah. Good. I just think that was a fascinating stat. Now that they've reached the first rate cut may be the sell-off. But you know, just follow the price action here weekly. I think this is one of the biggest trends that's going to happen over the next few years is you can see the divergence when the crash happened in 21, 22, how the IPO index, the kind of the unprofitable tech, the ARCs of the world, have just started participating in this rally. So the IPO is an ETF. I'm not saying pile into unprofitable tech or IPOs. I do think though this gap will get filled by acquisition. So something in my industry that's interesting. Everybody who was a corp dev or in corporate wanted to start a VC fund, and by 2021 they all did. No one wanted to work corporate and corp dev. Apple doesn't supposedly buy companies. They had all this cash. No one really needed to buy anything. But now you have this new upgrade cycle with AI, and everybody's investing in AI, and you're going to start seeing acquisitions as people position. So my big, you know, thesis here is not that sexy. I don't know how to play it quite yet, other than I think there'll be a lot of acquisitions, especially those companies that smaller tech companies that can position themselves as profitable so they don't become a burden on the acquirer. But I think obviously you're going to see some kind of catch up, either the mega caps start dropping and the IPOs start outperforming, we get more IPOs, or we start seeing a ton of acquisitions. But I think based on the amount of people that got out of corp dev and went to start their own funds, it wouldn't surprise me that you start seeing corp dev pick up. And there were rumors out on Friday that DocuSign and Salesforce, there was a deal brewing. There may be other acquirers there. So I think this is one of the most interesting charts for my business, and maybe one of the most interesting charts that confirms that maybe small caps outperform and mega caps kind of at best go sideways. But again, that's just another chart. I think this is interesting just to show you the breadth. Boeing was kind of written off, and just what is this? 90 RSI. It's only happened 5 times. It's been all those times. It was a great time to buy Boeing, even though it's up 100% off the lows over the last couple of years. So even companies like Boeing working. And they have orders through the next 20 years. So it's not like, I don't even know how you, like their numbers are confirmed 20 years out. So it's just, I think people just feeling more confident. And then finally, I thought this was interesting. I own a little bit of ILF. I think it is a bet on a weakening dollar at some level, and their governments there, kind of cracking down and wanting to try and change things. I think this, I don't know how to I'm not going to invest in startups in LATAM, but I think ILF and some other, there's ARGT in Argentina, which has had a good run. But I think
Mercado Libre, yeah.
Yeah, I think if the dollar stays here or weaker, I think you will start seeing as crypto or as blockchain improves and fintech, it's such a huge population. This is fintech moves to the blockchain for the next 10 years. And as assuming LATAM improves, that's a pretty good base. And that'll be a benefit of a weaker dollar. I think all bets are off there if obviously the dollar gets strong again. And then this secular trend is still my favorite secular trend, other than, that I can participate in. Semiconductors is very much behind the scene. I brought this up before, but Shopify is starting to, really do well. One of my bigger positions. And
only 15% of total retail sales are e-commerce. I would have expected much higher percentage.
Yeah, so just think about the room still. Like I haven't been to a mall. Do you go to a mall?
I haven't been in one in a while.
Yeah, so we don't know why it's only 15% because we don't go to the mall. But so that number does seem low, but I think that number gets close to 50% over the next 20 years. And see, so how do you own this, right? There's obviously, the Magnificent Seven, but I think Shopify, and maybe even China at some level is a player. And everybody at this point hates China, Ivan. So that's still keeping it simple. That is still, e-commerce is still my favorite secular trend. Okay, I'm gonna stop sharing.
All right, you stop sharing, and then I'll go back to my screen.
So on swing side, let's walk through some ideas.
Sure. Just before that, you mentioned the weak dollar. That is.
I do think that consumer staple chart was interesting. If you can go back to that consumer staple chart.
Yeah. It's back to its 200 days. So if it can go back above it.
Yeah.
And
you think they may surprise people next year.
A lot of companies here, they're paying 7% dividend.
Yeah, I think these companies that have been dogs might surprise.
They might.
As people move to quality. I'm not saying these are growth companies. I think as people move from speculative carboninus and say, "Fuck, that was a good year."
Yeah, and 7% dividend plus capital growth.
Yeah, I was looking at Mercedes. It's 5% dividend was down 20%.
Yeah.
So yeah, I think people will start moving money around and realize, hey man, I can be in the markets and not take as crazy risk as I did. So I think it'll be an interesting 24, 25.
Yeah, there's $6 billion in money market funds, right? So that's a lot of money.
Yeah.
So we have obviously during the past month and a half, we have the US dollar pulling back and also interest rates pulling back. That's what really fueled the stock market rally. And you already mentioned Latin America and like specifically Argentina and Brazil trying to break out. And India is another one that's been
Well, the sense, I think they already broke up to all-time high. No, maybe not. Okay.
not all-time high, but they're breaking out from a base. And I think basically the only one that, I mean, not counting Russia, obviously, China is the only one that is really near 52-week lows. So it'll be interesting to see if there is.
Well, it's universally hated now. I'm not saying it won't keep going down, but
yeah, I mean, they're like the only Chinese stocks near 52-week highs is like PDD, which is like a online retail, Temu kind of setting
like
up.
I said, like e-commerce trend, like that will, if China does bottom here, relative strength wise, the shopping, the e-commerce is the
PDD
biggest one.
and the Baidus and so far what's leading in China has been basically educational stocks, which is what outperforms when the market expects a recession. It seems like China might be entering one.
Well, you can see China language training, and in the United States, you have Udemy and you have Duolingo, which Duolingo's at all-time highs.
Yeah, it's near all-time highs. Definitely one of the.
And that's the EDU of the United States, where all the accounting for
IPOs.
Yeah.
Yeah, I mean, in terms of swing setups, as I said, if people really want to get exposure to really, big moves, they should go into highly capital intensive sectors like solar, even though it looks really ugly and beaten down. I think those have potential to just really perk up since it's the worst performing industry for the past year or so. So
even the monthly map, which first of all looks so good, and then
yeah, let's go back
to bed.
for solar.
But you're right, that could have all been related to interest rates.
Yeah, so I'm kind of thinking we might see some rotation into those.
Yeah.
Getting highly shorted stocks. I mean, setup wise, they don't look great, but they might set up. Just keep an eye on them.
Yeah, that might have been the ultimate fake out.
Depending
if rates have stopped going up and solar is.
Yeah, depending on your time frame. I think ENPH can run towards this 200-day. It has like 20% or so more room. There's some of the small ones like Upweek. I think it's setting up for potential breakouts. Upwork, not Upweek. Which one? A ramp. I think it's another one setting up for potential breakout.
They do.
I think Tesla might also has a chance. It's also partially.
I full disclosure, I own a few shares for a trade here.
Setting up here near 250, 254. Probably Nvidia is going to try to break out now that it held its 50-day and
Well, I think it's going to go this time in the video I was writing. It's everybody's now talking about competition. Everybody well, when the video everybody's now talking about it's a foregone conclusion how much competition they're going to have. So it's like
exactly.
Yeah.
That's why AMD is kind of trying to catch up. That's why Intel is trying to catch up. And
it's just the pie is getting bigger. I mean, semis. I mean, AI is. You also have crypto, right? So that's good for semiconductors.
Anything crypto related has been really hot as well, as you mentioned, in coin, and all the Riot and Mara, all the blockchain.
Yeah, there's something for everybody.
Yeah, I mean, a lot of stocks are extended, so I wouldn't really chase anything that is up like 3-4 days in a row because they can have a 10-15% pullback that would be normal. But there's still some, setups to work with.
I think you have to look at type basis. The market's gone up through straight up for 2 months, or it's 6 weeks. The last 2 Fed meetings. So people are chasing, and be careful about chasing. But at the same time, it's fun to participate when there's pin action, right? When dips are getting bought. So, but I'd be very careful about chasing things and be really
absolutely. You should not be chasing. There are a lot of stocks that are up 30-40% in a week or so, or 50% in a month, and they can easily pull back 10-20% and they can shake you out.
I mean, you're seeing the good news is like stuff like Elastic. You're seeing these gaps in software and then just kind of holding, right? Like the huge gap.
Holding so far, yeah. I mean, but you can probably get a better entry on like a little pullback or it's
No,
right.
I'm just saying like they're sticking, for
Definitely,
weeks.
definitely. So
Yes.
many of them
I'm
are.
not saying it's gonna continue, but you're seeing, this was so beaten up, Sentinel-1, wasn't it?
Yeah,
I
exactly.
mean, these things were so beaten up. And, they're starting to stick with big volume. So new shareholder bases at new, new prices. And, there's still people stuck, but there's a lot of new shareholders. This hit 100 billion last week, Palo Alto's. I think it's the first,
Yeah, almost
it's
there.
the first, what do you call it, cyber company to hit 100 billion. And then obviously there's Eli Lilly as compared to Pfizer, which is pulling back, but
Yeah, Pfizer is
Mhm.
very interesting. It's just
What's the exact opposite, right? So it's not, picking stocks does matter and having the right drugs does matter.
10-year
Uh,
low. That's 10-year low on Pfizer.
yeah. So,
That's interesting because Moderna, I think they recently came out that their cancer.
you don't have the fact, listen, there's a huge COVID reader. A lot of it's like, if you look at solar, again, a lot of it trades with interest rates. So if rates are going, what are the most leveraged interest rates? You can see the huge bounce when the Fed a month ago said we might stop, right? These things, for the agile can be incredible movers. The opposite is the companies that were all in on COVID, the real benefits have gone to the companies that not to ignore it, but just were investing in the future. So Eli Lilly and all these companies focused on, longevity, and the real problem facing America, which is obesity and diabetes, have really benefited. So, this is a tougher industry because it's product specific. You can't just bet on the whole sector. It's not very easy. All right, buddy, have a great week.
All right, you too, Howard. See you next week.
Everybody have a great week.
Bye.